The rand trading at 686 this morning, so even beating yesterday's levels of 688. And of course, we started yesterday above that 7 rand mark, but really the news out of Japan yesterday morning really giving a kickstart to these markets.
Good morning, Stephen. Yes, I think if we look at the rands and cents, it's once again been the bond bulls out there that have driven this rand stronger. We saw a very nice uptake from yesterday's bond auction, and it seems as though non-residents have climbed back into our bonds after selling them quite aggressively last week. And I think that's been the key catalyst for rand strength. But I think you touch on a very important point. We've seen developed nations out there, rolling out quantitative easing hand over fist. And that just plays into the emerging markets' hands very nicely, because obviously the dollar, the yen, all of those, and the UK for that matter, all of those that have rolled out those quantitative easing measures have come under pressure and are likely to remain under pressure and benefit those emerging markets with high yield differentials.
Of course, while we have developed markets moving further on quantitative easing, we also have developing markets doing more to try and weaken their currencies. And of course, we had Brazil doubling its Tobin tax from 2% to 4%. Do you think that could have redirected some foreign investment into South Africa?
I think that does indeed make South Africa just that much more preferable within the emerging market space. Remember, for a number of years, South Africa hasn't been the first choice for emerging market investors, and that meant that investors were underweight South Africa. In a number of instances, they were long countries like Brazil, Turkey, etc. And now they've started to catch up. They've started to buy bonds, as I mentioned a bit earlier. And the fact that Brazil now is imposing taxes makes it even a greater argument for those investors to diversify towards South Africa. At this stage of the game, although the pressures are mounting, we haven't heard anything from the authorities with any concrete measure that they are going to introduce any policies to introduce a Tobin tax domestically. So until that stays the status quo, I'm afraid South Africa is likely to benefit from these unprecedented capital inflows. We might, of course, get some more clarity in this regard from the medium-term budget later this month, but at this stage, South Africa, that liquidity is a very nice advantage. You can get in, you can get out, and you don't have to pay any taxes.
Of course, we do have golden Forex reserves coming out tomorrow. Do you think there's going to be evidence in those numbers that the Reserve Bank and the Treasury have been active in the market once again?
Well, that's another interesting one, Stephen, because if we look at the provisional government finance figures, we see that the National Treasury wasn't really that active last month. Well, we don't believe that they were very active that month because their cash balances remained pretty much unchanged. The Reserve Bank might have carried on with some of its longer dated FX swaps, but we're not sort of holding our breath for any huge amounts of reserve accumulation, which also counts in the favour of the rand bulls out there, because if the authorities aren't stemming this rand weakness with any meaningful vigour, then it's really open season for these investors to come in, buy our bonds, buy our assets and strengthen the rand.
Of course, we have those IMF meetings coming up. In the meantime, we have had the IMF warning countries against using exchange rates to boost growth. Do you think the currencies are really going to be under the spotlight at the IMF meetings, and perhaps a coordinated approach that the IMF has been calling for?
I think so. I think it's going to be a hot topic this coming weekend, but it's very difficult to know how they're going to get it quite right, because you've got everyone racing to the bottom. You've got developed nations looking for their currencies to weaken. You've got emerging markets at the same time, and it's going to be very difficult to see who takes preference over the other. I think also, as the IMF alluded to, it's very dangerous to just rely purely on exchange rates to pull your economy out of the mire. You also need improved productivity, and that's the one worry for me when it comes to the rand in South Africa. We can't rely exclusively on the exchange rate to create jobs. We also need increased productivity so that foreign investors come and open up shop. We get that foreign direct investment, and that creates jobs and ultimately consumption. So it's not only exchange rates, it's often used as sort of the scapegoat and the only sort of tool available to stimulate an economy, but that just simply isn't true.